Well, DEI initiatives have been under attack in some quarters in the United States. Of course, they are part of the conversation here at the World Economic Forum in Davos. And one of the folks who is definitely pushing forward that conversation is Robert Smith. He's Vista Equity Partners Founder, Chairman, and CEO. That firm, just around $100 billion in assets under management. And it's always a pleasure to talk to him, to have the opportunity. Robert,
always happy to be here with you.
Welcome. Thanks for being here.
Yeah, my
so,
pleasure.
as I mentioned, DEI has gotten quite controversial in the United States. What do you make of that, and how do you kind of manage around that and stay the course?
Yeah, it's interesting, Julie. I'm not quite sure why it is so controversial. You know, the facts are irrefutable, that more diversity in thought, in opinion, and teams actually produce better outcomes, lower risk, higher returns, faster growth, and McKinsey, BCG, you name the consultant has come up with this. In our space, in asset management, NAIC has put together a 20-year longitudinal study. They've done it twice and shows that diverse firms have been performing 200 to 1,600 basis points over the Burgess average for over 25 years. So you just wonder why it's so controversial in some respects, and I can't explain exactly why it is, but I will tell you that the proof of the pudding is that these companies have performed better. And when you have diverse boards, when you have diverse companies, that diversity of insight actually has accelerated growth. So while some are coming forward with rhetoric about, it's not the right answer, what we are saying, I'm saying with executive CEOs that I know in the US and here they actually follow the data and say, listen, while we may not talk about it as much, we are going to absolutely do the things that make sense as fiduciaries of capital and of stewards of stakeholder interest to ensure we get the highest returns and the lowest risk profile. And diversity shows that, and having more diversity and inclusion is one of the best ways to accomplish that at scale sustainably over time.
Are you finding that you are having fruitful conversations here in Davos? How are you sort of bringing that to Davos, and moving that forward?
It is so wonderful that you asked that question, because people say, why do you go to Davos? And this is one of the reasons. And I was just reminded, one of my good friends, Chuck Robbins at Cisco, and he and I, do a bunch of things together in Glance, but it was here that we decided to do something about the broadband disparity for the HBCUs. And in that effort, one of the elements we found, the Department of Education had basically put out in essence, an edict that if you don't have the proper cybersecurity infrastructure and protection, you lose Title IV funding. Well, the HBCUs, about 80% of the students need that in order to matriculate. And Chuck and I sat in one of the buildings and said, let's do something about it. Cisco came in with capital, we came in with resources, capital, and resources, and we have now completed 61 of the companies or the HBCUs that actually had deficiencies in that area, which protected $1.5 billion a year in Title IV funding. Now, that's kind of phase one. Phase two, of course, is how do we bring infrastructure for broadband access for the 82% of the HBCUs that are in these broadband deserts. And it's the partnerships that I've created here and the relationships that I've created here that translate back as part of the Edison Alliance and others with Verizon and others that has enabled us to now put together over 45 different town halls, over 5,000 people in the U.S. across the southern states, so that we now have the ability to deliver the data, the information, so they now can access the $100 billion in essence, the broadband funding that was put into law a few years ago. So all of those are activities that in many cases started here. So Davos has a special place in my heart for enabling our community to participate in this fourth industrial revolution, this next generation of opportunity.
So many very large tech companies here, Robert, Microsoft, Amazon, you name it, all really trying to shape the future and having it being driven by AI. How are these big cap tech companies doing on DEI initiatives?
I will tell you, they all have the proper intentions and continue to put efforts forward. One of the things, all of them are partners of ours, and we all know there's going to be phases of this. First phase is going to be the hardware vendors going to capture the vast majority of the economic grant, and then it's the super scalers, it's the Microsofts, the AWSs, Googles, et cetera. And our engagements with them is they are keenly focused on ensuring that we have capacity and understanding in our community. a classic example. We have hackathons across our portfolio companies, and in those hackathons, we had HBCU students participate in those hackathons. These are our senior developers. Those hackathons are funded with technologists from Microsoft, from AWS, from Google, and from that, actually, we've come up with very specific applications and use that we use across our portfolio companies. And in fact, 2 of those students run winning teams from those hackathons. So that's one instance. Another instance is we've stood up a curriculum at Morehouse using one of our companies, Stats Perform in sports, and highly oversubscribed. And now we are teaching and training, and we are having these large superscalar tech companies saying, how do we participate? How do we ensure that these students have a chance to actually contribute to the fabric of this artificial intelligence, so that we actually have the ability to ensure that bias does not exist, and we're taking into account all of the elements of our society, so that we can actually make this a highly productive tool and not one that's going to disadvantage certain communities.
I want to switch gears and talk about your portfolio companies, so just what you're seeing in your business, because we've been talking all about AI, right? You're known as like the enterprise tech guy when it comes to private equity. Are you looking for opportunities specifically in generative AI, or are you sort of agnostic and you're just looking for good opportunities? How are you thinking about that?
We are looking, it is an enabling technology, just like other enabling technologies have come and ultimately been infused into the fabric of our companies, cloud technologies, blockchain technologies. We've been, of course, engaging in artificial intelligence for well over a decade and implementing those in products and solutions and services. Gen AI gives another gear to that. And so first thing I say, we put together a framework and a risk rubric of existing portfolio companies. Where's the opportunity, where's the risk, and how do we apply our resources against that? How do we ensure we have the right partnerships with these superscalers, these technology providers, to think about the platforms that they are developing to enable us to develop better products, services, solutions, go-to-market activities for our portfolio companies. So that's one main thrust. The second, of course, is what I call the productivity nature of it. We have 68% of our employee base of our portfolio companies are developers. So 90% of our companies now are implementing some form of Gen AI in code development, code assist. We're seeing between 10 and 35% productivity increases. Now, huge numbers. You've got a choice. You direct that towards building more, faster, products, solutions, services, or do you use that to capture more profitability? We have been talking for years about the war for talent. We think this is an enabling activity for us to ensure that we can continue to drive our companies forward and in some cases reduce the cost of delivery. And that's where the rubric of decision making occurs.
Sorry, just to follow up on that real quickly. But you're not saying you're cutting 10 to 35% of folks.
Oh, no.
Right, if that's what you're getting.
But that's the productivity you get from your developers. Now you have choices. Do you actually use those productivity gains to develop more code faster, right? And put those into the market, new solution sets, et cetera? Or do you use that to reduce the number of people who are actually maintaining existing code bases? So, it's new products, new opportunities, or reduction of costs for maintaining what is your existing code base. So it gives you a completely different dimension on which you can underwrite, and completely different dimension on which you can think about your investment decisions and how the market landscapes will change for the competitive dynamic in each of your portfolio companies. So it's quite fun.
A lot of technology here it's cool. Like, it really captures your mind on what a lot of businesses could potentially do at some point. But are the valuations on these companies just too lofty?
So if you look about the Gen AI, we have seen this how many times in the last few years, so you'll see this, oh wow, this is where we have to rush into, and it's created an interesting opportunity for us in this respect. The venture capitalists, growth equity, a lot of the capital is flowing to the Gen AI, LLM model type platforms, et cetera, et cetera, et cetera. I always think about it, the first wave is going to ultimately go to the hardware vendors. My sense, $2-3 trillion of economic rent and value will accrue to that category of providers, some new, some existing, et cetera. The next wave will be these superscalers, right? They're going to actually capture a massive amount of economic rent. The long tail is going to be the enterprise software companies. The small, medium businesses aren't going to build their own solution sets. They're going to come to their enterprise software vendors and ask us for how do we utilize Gen AI to create more effective and efficient and productivity in our businesses. So that's a dynamic. What that's created is a movement of capital, VC, into the Gen AI providers, so some of the enterprise software companies now are looking, the small ones are now looking for capital. They can't get it out of that marketplace, and that's created a massive opportunity for us in private credit. Okay, so that's why our private credit business now, I call it, is overrun with opportunities in many respects, because they need capital. The VCs who might be in, they don't want to necessarily mark down the equity values of those businesses, because they were marked in 2020, 2019 when were lofty valuations, but they need the capital, and we can actually put together some pretty unique structures that we think serve our stakeholders, our credit stakeholders, quite well. So it's created a massive opportunity because of the gold rush over in
Wow, really
in Gen AI.
interesting.